Hello, everyone, and welcome to another episode of the Market Pulse series. Thank you for joining the session. So today, we'll be covering quite a number of things currently happening in the markets, some key market developments, especially the ones that happened between the market snapshot series in the morning and the current time. So once you go through these, then hopefully you'll be able to identify trading opportunities going forward for the rest of the day, and of course, for tomorrow, which is Friday and the end of the week, before we get to the non-farm payrolls week. So before I make any progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So hi, Butin. Hi, I can see J Squad. Thank you guys for joining. So let's get things started. I will begin starting by the most recent news that we are expecting from the US. So looking at the economic calendar here, where is that? You'll notice that there was quite a number of news announcements happening at 3:30. We had the US final GDP quarter over quarter, which came in at 2.1%, same as the previous quarter, but it missed expectations of 2.2%. So unemployment claims came in lower than expected at 204K versus the expected 214K. And the previous reading was 202K, so a slight rise from the previous number. So final GDP price index 1.7% versus 2% and 2% previous. So it was quite mixed data that caused a lot of mixed reactions in the market. But then overall, what we are seeing since the London session is a much weaker dollar. And with weaker dollar, we have seen other assets start to strengthen against the dollar. So US stocks swung between gains and losses on Thursday as treasury yields resumed their upward trajectory and high oil prices bolstered the case for interest rates to remain elevated for an extended period. Meanwhile, economic data for the US painted a mixed scenario. GDP growth was unchanged at 2.1% for quarter two, but consumer spending was revised sharply lower, meaning that consumers in the US are now consuming less, and consumer spending going down is quite consistent with the Fed's expectations. GDP remaining strong is not very consistent with the Fed's expectations. The Fed is looking to slow down the economy. So if the economy is growing faster than expected, then the Fed may have to do some more work, which may include keeping interest rates higher for longer. So on the other hand, initial jobless claims came once again below forecasts. Traders are also keeping a close eye on the political deadlock concerning a deal to prevent a US government shutdown, and comments from the Fed Chair Powell and other policymakers today for further clarity on what the Fed plans to do for the remainder of the year. So on the corporate front, Apple, Microsoft, and Amazon were in the red, meaning that they were losing. In contrast, Peloton surged about 4% after announcing a 5-year partnership with Lululemon. So that's basically a highlight of everything that's happening in the markets right now. And more focus is being put on the potential for a US government shutdown. So there are key developments that have happened since morning. And one of them is that a key vote is looking to be passed tonight in Congress that would avoid the US getting into an eventual shutdown. So trying to look for that highlight right here. Yeah, it was done a couple of minutes ago. So US Senate votes to, I'll try and highlight it for everyone to see. So the US Senate votes to begin debate on a stopgap spending bill to avert a partial government shutdown that could happen as soon as the 1st of October. So with this in mind, seeing the Senate making pace to pass these bills before the eventual deadline basically shows that at least there is some form of agreement between the two houses, and potentially they could avert a government shutdown. So since investors have been following up on this and trying to understand how it may develop, a lot of traders were already betting on a shutdown, and there was a big sell-off in US equity indices, and of course, a huge buying of the dollar. So following those news, this is the reaction we are seeing in the markets. So first, looking at the dollar index, big sell-off since morning. So you can see that the market struggled to find a bottom here, then kept going further back downwards. So the dollar index weakening, the pound found some ground to rally. The Euro USD made some nice rally here. The USD yen, which we were expecting to be moving higher after getting to this area here, has struggled to move higher, but then at the same time, it's unable to move further back downwards. So it's a little bit balanced. So you can see the momentum here, up, down, but we don't have major price direction. So for USD CAD, we have what looks like a break here, where the dollar is now weakening and the Canadian dollar is attempting to strengthen against the dollar. So if we break this pattern, then there's a good chance we'll be seeing some lower prices. So as for gold, we were monitoring this on the 15-minute chart. So eventually there was an attempt to break higher, which failed. And then the market broke towards the lower side. And since then, we have seen consistent pressure pushing gold prices lower. So it was as easy as that. You monitor the flag here, and once the market makes an eventual break, then you basically take your trade. And now the overall direction for gold is expected to be further downwards. So AUD-USD managed to bounce clearly and strongly from this area here, and everything has been high upwards since morning. So I remember discussing this with you guys this morning, drawing these two trend lines, and clearly this has played out well, especially on the 4-hour chart after we had the spinning top and a green candlestick here. So since then, we have had some pretty good momentum as the Australian dollar continued gaining against the US dollar. So US equity indices were expected to move further back downwards. So after the data release this afternoon, we have seen a very strong momentum upwards. And this momentum is expected to continue, especially if the Congress was to pass those bills and eventually avert a potential government shutdown. So in that case, we could be seeing the market moving further upwards and getting to this target here, which was the beginning of this trend line at this point. So US 500 also made a good run here. And of course, the Dow Jones also made some good run. However, there is a key event still for the day that you have to be worried or concerned about, and that's the speech by Fed Chair Jerome Powell. So we know that from the economic calendar, we will be expecting a speech. This speech will be happening from 11 p.m. That should be about 3 hours from now. So the Fed Chair, Jerome Powell, is set to issue a speech, and I'm trying to load this. So let me refresh my page. So he's set to issue a speech at a town hall event with educators hosted by the Federal Reserve in Washington, D.C. So during this speech, investors will be following closely to understand the key developments in terms of monetary policy and any hints about the Fed's decision on its next meeting, as well as the data that the Fed is watching. So if there will be any hints shared by Fed Chair Jerome Powell, then they might cause volatility in the markets. So now that we are seeing the markets responding very well to the Congress, to the progress made by Congress, then we know that Jerome Powell has this habit of providing news that move the market in the opposite direction. So while, yes, right now we might be very excited with the current momentum being experienced with US equity indices. So this strong momentum today for the Dow, strong momentum for SP 500, and of course, strong momentum for the NASDAQ. This could have a very quick end, especially if Powell was to be more hawkish. So if he talks about, let's say, potentially going for another rate hike, or even keeping US interest rates higher for longer, then in that case, we could be seeing the dollar strengthening again and the equity indices moving further back downwards. So that's a key risk factor that you have to consider especially if you are willing to take your time, and then at 11 p.m. you basically check out the announcement by the Fed or the speech. So if there is any form of hawkishness, then you should be seeing this momentum changing direction immediately. So European equity indices also made a good rally. This is the French 40 index. The Euro 50 index also broke the trend line. And of course, for the FTSE London 100 index, we have seen some impressive recovery after the big sell-off this morning. So in this case, we are seeing the market moving further upwards. But then also it's important to notice that this has been developed as a major resistance level over the week. If you look at the Monday, Tuesday, Wednesday, and Thursday high, then this is a consistent theme. So the market might actually get exhausted around this area, and perhaps you could be seeing some further downside in price. So Brent oil had a big sell-off since morning. So we were expecting that the market would find some form of support around $93.525 per barrel. But then it has managed to cruise through that area and is now moving even further downwards. And now the key immediate short-term target is $92.313 per barrel. And if that bearishness persists, then all the way down at $90.814 per barrel. So there's still some form of momentum that we're expecting to see here. And if this price keeps going down, then our pivot point is 92.313. But then the far out target will be all the way back downwards to around $90.814 per barrel. So currently, there's quite a strong bearishness being experienced. And if you're on the short selling side, then you take advantage of this. If you're no longer in the trade, doesn't make it doesn't make any sense to look for an entry position. It makes sense to be patient and wait for the next setup. So the next setup would be another swing upwards, retesting the previous high. So notice how these resistance worked so well, and the market was unable to break. So now that the market is moving further back downwards, then perhaps you could be seeing some opportunities coming on the break, and the break could be happening any point from now. So if I remove everything from this chart, I zoom out, I highlight this high here, then we look at the key price levels that we have experienced over the times. One of them was this area here. Notice how the market was unable to break here, but then it broke upwards and downwards. And now the key price levels to watch are just slightly lower. There's this area here. It was acting as support here and here. And then, of course, for the week, we know that the market found support around this area. So notice the highs here and now the bottom here. So 90.847 and of course 92.276 is a nice target for any person on the short selling side. But then oil markets are still completely bullish. We are still very close to the top. So I don't believe this is the area where the market is reversing and moving back downwards. There's still more room for upside. So this is a welcome pullback. So I'll still be checking on any questions that you guys have. So hi, Caroline, hi, Charlie, and Malombe. There's Joseph. Hello, and welcome to the session. Got this question. Does it mean a rising yield indicates falling demand for treasury bonds? And that's leading to gold free fall. Yes, there's a rising demand for US Treasury bills. So whenever there is a rising demand, then we normally see yields also moving higher. And there's a difference between US Treasuries and yields. So when you consider a bond, there's the value of that bond that can be traded on a secondary market. And of course, there's the yield that the bonds are giving in the market. So yields have an inverse relationship with bond prices. So what's currently happening is that a lot of investors, including governments, are selling US treasuries. And by selling US treasuries, the prices of those treasuries are going down because supply is high, but then the yields are moving higher. So what we are seeing is yields moving higher, bond prices moving lower. So in such a case, or in such a scenario, you find investors preferring to buy those short-term treasuries because they have a good yield and they get to cash out with some meaningful returns. So with short-term yields yieldings between 4.5% and 5.0%, then this is considered as a very good return on a very short-term yield bond. And we are seeing this demand basically driving gold prices lower. So why would you be holding onto gold, which is not giving you any returns? Yes, it's holding its value, but it doesn't have any yield. Where on the other hand, you could buy a very short-term US Treasury, and once it matures, then you have your money back. The dollar is currently strong, stronger than any other currency, and on the other hand, it's giving you some good return. So investors are considering to invest in US Treasuries compared to buying gold. So we have that potential difference happening across board, basically leading to a big sell-off in gold and a very high appetite for short-term treasuries. So hi, Cosmas. Thank you and welcome to the session. So currently, I think the key highlight of the night is that we have this speech coming up at 11 p.m. Being presented by Fed Chair Jerome Powell. Second highlight of the day is that the US Senate is looking to pass the bills that were late. And if it happens to pass them between today and tomorrow, then the US government will not go into shutdown, and that is quite bullish for equities. So those are two key highlights. And of course, as we head into tomorrow, we know that the Fed will be looking to watch its favorite inflation measure, which is the core PCE price index. So personal consumption expenditures are very important to the Fed. And once we get this data, it basically informs them about the real level of inflation, and they use this data to make their decision. So investors will be watching closely. A big spike in inflation would mean that the Fed will go for another rate hike, or will likely go for another rate hike. But then if inflation continues dropping, then we know that the Fed will consider pausing interest rates again. So it differs from core CPI in that it only measures goods and services targeted towards and consumed by individuals. Prices are weighted according to total expenditure per item, which gives important insights into consumer spending behavior. CPI is released about 10 days earlier and tends to garner most of the attention. But then also the core PCE price index tends to be very important for the Fed. So that's it for the day. I don't think there's any other update. That was the key highlight for the day. So in summary, looking at several charts here, I think one of the most interesting charts will be USD/JPY because we have the pullback that we have been waiting for. So the market making another rally towards the previous high would give a nice entry point. Then for gold, we have a clean break towards the lower side. So it implies we could be seeing some further downside momentum in gold as we continue seeing demand rising for short-term US treasuries. Then for Brent oil, we have a nice pullback. So trading back upwards will be quite healthy. So if you see evidence of buyers entering this market, then it might be the time to go for those buying positions and target the previous high. So for US equity indices, we are seeing some form of bullishness happening here. But then if you look at the price action for the week, this is a major resistance level since Monday. This is Monday, Tuesday, Wednesday, and Thursday. So in this case, now that we are retesting here, if there's a further bullishness, we could break this area and head straight for 4,355 for the S&P 500. For the Dow Jones, we could be seeing the market breaking here and heading all the way up to the top of the pattern, which is all the way up to 34,152. So a break above this trend line would be a trigger movement, showing that the market is now headed higher and it could get us all the way up to this area. So for US 500, it's the same thing. If we break this area, then the target is for 355. And then for the Nasdaq, we have already broken that trend line. So now it's a clear target that the market is headed for 14,855. So I think with that, we have quite a good summary of what we see if it is still within this particular wedge. So we could be seeing the market bouncing and getting back towards the upper trend line. The dollar index is trying to get some form of support. So notice the big sell-off, some attempt to go up, another big sell-off, an attempt to go up. And if the dollar index recovers, then all these major impulses that happened early in the day could be reversed as we head into tomorrow. So if Jerome Powell's speech happens to be something that strengthens the dollar, then you should be ready to take advantage of these prices moving back to where they started all the way back downwards. So this could be the same theme for anyone trading the Euro USD too. So we could be seeing also this happening, the market getting back to the previous low. So just be patient, wait for the speech, and hopefully you'll be able to take advantage of that. Well answered. Thank you, Charlie. Treasuries and stocks also moving in similar direction. Yes, sometimes during different market cycles, it's quite common to see treasuries and stocks moving in similar direction, but then correlation doesn't mean causation. So just because they are moving in the same direction, it doesn't mean treasuries are causing the movement in stocks or stocks are moving, causing the movement in treasuries. So there are different dynamics to this. So on one hand, the stocks have been rising as a result of expanded deficit spending by the US government. And that's what the Republicans are currently fighting. They want to control the government spending. But then for equities, they have been rising because of interest rates that are basically moving yields higher. So with higher interest rates and higher bond yields, then there's a higher demand for US treasuries. So that may explain why we are seeing both asset prices moving in the same direction. So thank you very much, guys. Thank you for your time. Remember, there's a new episode of the Market Snapshot series. Of the Bullish Banter podcast. And of course, I tried something different this time. So I published the latest episode of the podcast on my Twitter handle. So if you check at Rufas KE, you will find it. So I just want to show you where it's uploaded. So when you have some time, just listen in, and then you can share your reaction or what you think about it. So in the most recent episode, we basically covered investing in bonds and what it means to you as a retail investor and how you might go about it. So I'll be sharing the link with you, and once you have some time, find a reason and then share your responses. So there's the link. There's this comment, DXY and gold moving in the same direction. How does this tie with the argument for demand for treasuries? I think you are mistaking the short term versus the medium term. For the last 11 weeks, the DXY or the dollar index has crossed higher. It has been on a bullish momentum, including this week. It's currently trading at a price that is higher than the opening of the week. So with that in mind, if you look at the price of gold, it's completely opposite. So if you look at gold and you look at a longer time frame, let's say the daily, then you would notice that for the last couple of weeks, gold has been losing to the dollar. But then if you're looking at the dollar index, I wish I had more history here, then you know that for the last 11 weeks, the dollar index has only been gaining. So clearly they are moving in opposite directions, not in the same direction. So thank you very much, guys, and I hope to see you on the next session.